There we go. All right. So having some technical difficulties, but it looks like we are getting ready to roll right now. So sorry for the delay. Just had to, unplug it and replug everything back in. So here we are. So welcome to epicrei.tv, where we show people how to invest in real estate so they can escape the daily grind and retire early. And in today's show, we're going to be covering the difference between operating your business as a sole proprietor and a business entity. And we're going to talk about what a business entity is and why you need one. But to answer the most asked entity question is, when do you actually need it? So we'll cover that. But first, save the date, October 14th through the 16th, live in Las Vegas, Nevada. You are invited to attend the next Epic Intensive, How to Create Passive Income Using Creative Financing and Real Estate Investing Strategies. It is the transformational event for real estate investors of the year. And there you will discover the secrets to revealing off-market deals hiding in plain sight, the engine that really drives your real estate investing lead generation, the art of how to influence sellers and win deals. Really, it's the most profitable skill of a real estate investor. Then also the secrets to crafting creative deal structures so you can maximize the ROI with every opportunity that crosses your desk and create passive income using more of your brains and less of your bread. And then we're going to talk about the secrets to putting your money to work so it works harder for you than you did for it. And then lastly, what's new, what's hot, and what's actually working in real estate investing today. So if you are into rah-rah real estate investing seminars, this is not the one for you. However, if you'd like to make real estate investing simple, fun, and most importantly, profitable, be in Las Vegas. And that's on October 14th through the 16th. Tickets are available now, and the closer we get to the date, the more expensive the tickets become. And so if you'd like to join us, go to epicintensive.com, epicintensive.com. And that's not some weird little sales trick, by the way. It's just that the closer we get when you're doing live events, the more things that you have to put money down for, more deposits you have to put down, and then those deposits start to become hard and they become non-refundable. So that's why. So if you all get in early, I can give you a little bit of a break. But if we wait, then I've got to take on a little bit more risk, and that just kind of helps me out. All righty. So epicintensive.com. Hopefully y'all can make it. So it's one thing to make money. It's another thing to keep it, and keep it away from the bad guys. And the bad guys I'm referring to, the bad guys that are all out there to go and take what you've worked so hard to build by either way of lawsuits. Real estate can be a very litigious practice, or unnecessary taxation. We're all supposed to pay our fair share, and we all absolutely do. But you certainly don't want to pay more than you're required to. And so with this one subject that we're talking about today, you can kill two birds with one stone, and that's with the right business entity. So let's talk business entities. And I've asked my new partner, Tommy Thornburg, to join me today from Corporate Services. Let me introduce him. There we go. I am running the show and producer of the show today. So going to be multitasking, and I've got 2 arms and 2 feet on the keyboards right now. But I've asked him to join me today and help me out. So if you like what he has to say and this makes sense for you and your business right now, I've made some special arrangements with Tommy and Prime Corporate Services just for Epic listeners that you'll totally be able to appreciate. So Tommy, welcome to the show.
What is going on? Thank you. Thank you so much for having me. I appreciate it.
Right? We finally made it. This is our second go around, and it took us 15 more minutes just to get here today. But we did it.
Matt's downplaying the technical difficulties here. He's over there scrambling, unplugging stuff, chatting with everyone in the company. But,
right.
We made it happen. So thank you for having me. I
went through 4 virtual assistants on their end before I got the right answer. But that was a good one. It worked. So great. Tommy, share with me a little bit about what you do in Prime Corporate Services and kind of your background and how you've come to be where you are today.
For sure. Yeah, absolutely. I'm going to share my screen. I'm going to share the slides right off the bat.
Okay.
So we can stay on track. And I know we're running a little bit late with the technical difficulties. So that way everyone can still go through all the information, and we can kill 2 birds with one stone here. So
fantastic.
My name is Tommy Thornburg. Thank you so much again for having me. I'm happy to be here. I'm the president of Prime Corporate Services. We have been in business for about 10 years now. And over those 10 years, we've put a large emphasis on helping the little guy, right? Startup business owners, entrepreneurs that are either just getting started or don't have a full team of CPAs or a full team of attorneys and are keeping things a little bit of a smaller scale and don't have in-house counsel. So like you said, it is not what you make, it is what you keep. When I was listening to your podcast, one of the things that I loved, and part of the reason I was so excited to be here, is I love that you preach the long game. There's so many groups out there that are get rich quick type feel, and anything that's worth having takes some work, takes some time. So I appreciate that messaging from you as well. I think it's awesome.
Sure.
But a little bit about Prime Corporate Services before I jump into it. Like Matt said, I'm going to talk about the different types of entities. When should you set up a business entity? What's the best entity for you to have? But before we do that, Prime Corporate Services, we've been in business 10 years, like I said, and over those 10 years, we've actually helped over 100,000 investors and entrepreneurs at this point. So real estate investors, stock investors, online businesses. Some of you watching this may have multiple streams of income that we're happy to talk on as well. Another area that I'm going to discuss, business credit and corporate funding. So since COVID started, a lot of banks have really tightened up on lending from a personal aspect, but it's been a lot easier for whatever reason to get business credit and corporate funding. So on average, over $2 million a month of actual business credit and corporate funding that doesn't have to be tied to you personally, right? One of the things that Matt preaches is creative finance. And I think in addition to that is the more that you can separate your personal from your business legally and financially, the easier it is long-term to have that growth from a business aspect. So tax services, I've got a full team of CPAs, personal taxes, business taxes. We file over 5,000 returns a year. And last but not least, the one that we're most proud of, customer experience, right? A+ with the BBB, 4.9 with Google. I think that's the reason that Matt was even willing to talk to us in the first place, was just the feedback that we've had from the clients that we've already worked with. Fun stuff here.
Wow.
A fun stat for everyone. If you were to read every disclaimer that you signed included, I think it's nice to see how quickly tax benefits can compound, whether you've done your first deal or not, and how quickly you can save thousands of dollars in taxes just by having the proper business entity in place. So why should you form a business? Keep in mind on this presentation, I want to try and make sure that everyone is able to take something away, whether you are brand new and you haven't done a deal yet, or if you're a seasoned vet and have done multiple deals a week at this point is what you're pacing for. Everyone can benefit from the tax code. There's over 72,000 pages of a tax code. So by having the wrong business entity, or even worse yet, no business entity, all you're doing is leaving money on the table by not making sure that you're taking advantage of the deductions that business entities have to offer. So I got to give Matt a little bit of credit here. He's like, I don't have the horror story, right? A lot of people have when I got sued, when I lost a bunch of money in taxes. And Matt didn't want to necessarily talk about this, but I'm going to speak on it for him. If you're set up properly from the very beginning, you don't have to have these horror stories, right? Nor do you want to have those in place. So to add to the why should I set up a business entity? How does it benefit me? A lot of you watching this are probably aware that it gives you some protection and gives you some tax benefits. But here are 7 reasons why we believe it is truly important to not only understand how you're structured, but what entity is best. So number 1, legalization. Show yourself as a business. File everything properly with the state from a federal standpoint so that you're able to show your clientele, just like you want to do business with legal entities, so does your clientele. We want to give you what you need to be able to show that from the beginning. Number 2, separation and protection. Personal is personal, business is business, right? Everyone watching this, you have a name, a social security number, a credit score. We want to be able to show you how to do the same thing with the business. Name it, EIN number, Paydex profile, or a business credit profile, so that you're separating the personal and the business. Number 3, tax status classification. This can be one that's tricky. Are you best as a sole proprietor, a partnership, S corporation? Everyone's situation's a little bit different. So like Matt said, he worked something neat out for each and every one of you as far as a consultation is concerned. But understand what tax status is best for you and why. It may vary based off the business that you're in or the type of real estate you're investing in. Number 4, tax deductions. Real estate investors, there's over 250 different deductible expenses that you're able to take advantage of by having the proper business entity in place. Okay. Number 5, pass-through functions. LLCs and S corporations work as flow-through entities. So the reason that I say, even if you haven't done a deal yet, understand what business entity is best for you, because as long as you have a taxable income, there's benefits you can take advantage of from a tax standpoint by those passing through from a tax standpoint. So we'll talk a little bit more on that here shortly. Number 6, startup provisions. Takes money to make money, right? We've all heard it. We all hate it. Every business has cost. Every business has startup expenses. If you understand how to classify those the right way, you can make those 100% tax deductible, depending on what those are for. Number 7, online compliance. Who's got mailers? Who's driving for dollars? How are you marketing? How are you showing yourself online? Right? A lot of you have probably already gone to primecorporateservices.com to see what we offer, who we are as a business. We want to be able to do the same thing for you and make sure that you are showing yourself as a legal and legitimate business. So plenty more reasons. In my eyes, those are the top 7 as to why you should make sure that you're set up properly. Next question that we often get asked: when should I set up a business entity? Should I wait until I have my first deal under contract? Should I wait until I locate my first property? The time is now. And the reason I put it that way is, like I said previously, our goal and what we want to be able to do is make sure that each and every one of you, good or bad, profit or loss, are maximizing from a tax standpoint, right? What the IRS is looking for is that you have shown the intent to start a business. What do I mean by that? Each and every one of you has put in time to understand how to be a real estate investor by watching this. Now ask yourself, have you paid for subscriptions? Have you paid for coaching or education? Have you paid for a new computer to look for properties? Whatever that looks like, as long as you are genuinely showing the intent to treat this as a business and a long-term revenue stream, you open the doors to these additional deductions of being an actual investor. Okay. So once again, to elaborate on how that works, there are so many different types of entities that it can be overwhelming if you're looking into the research of different types of entities and then different tax classifications. So to keep it simple, which is really what we want to do, we want to keep a complicated topic simple and allow you the ability to maximize from an asset protection standpoint and a tax standpoint. So LLCs, S corporations, fundamentally, they really have a lot of similarities. So as long as you have that taxable income, you can show profit and loss statements with your LLCs and your S corps if you're showing the intent that allows you to either receive a larger tax return at the end of the year or pay less in taxes. Okay. So the reason I thought it was beneficial for us to get on now is that way you don't get to the end of the year with a shoebox full of receipts and think to yourself, should have set up an entity, could have saved money in taxes, would have been more organized. I'll do it next year. right? Every real estate investor that's been doing this for a long time, I'm sure has had a year that when they filed their taxes, they said, I am going to be more organized next year. I am going to make sure to charge all my business expenses to one card. I'm going to get a bookkeeper. If we can stay ahead of that now, allow yourself the ability to reap the rewards before the end of the year. Now, how does this work? Once again, like I said, the 3 primary goals, I know I went over the 7, but asset protection, tax benefits, show yourself as a business. Each and every one of you as an investor should have interest in being able to take advantage of those areas. So from a separation standpoint, do you have partners? Okay. The operating agreement is one of the most crucial components of any business entity. If you set up your own entity, what did you do with the operating agreement? For those of you watching this that already have entities in place, great. It's better than nothing. How is it structured? Does it show what type of real estate you're looking to invest in? Do you have owners or ownership percentages? Eventually, do you want to sell your business? Do you want to be able to give percentages of your business up to investors? And if you don't, that's okay as well. But make sure you clarify that within the actual agreements themselves. Okay. So here's a list of just a couple deductions. Like I said, there's over 250. So as exciting as asset protection and tax benefits are, I know this isn't the most exciting topic in the world, but here's a couple that everyone pays, right? Phone, internet, power. A lot of these are just anyways expenses or bills. You're paying these anyways. By having the proper business entity in place, we want to show these as actual business expenses, right? Even the health insurance, right? Me being self-employed, I don't pay my health insurance. My business pays my health insurance. I don't pay my phone bill. My business pays my phone bill, right? Why? Because I use those for my business expenses, and we want to make sure that you're able to do the same thing. So we'll go over those and we'll break those down in some greater detail when we speak with you one-on-one. Going back to the legal disclaimer, here's the numbers. These are not your numbers, but I know a lot of this can be difficult information to comprehend. So let's break it down with some actual numbers to show you how quickly you can save thousands of dollars before you do your first deal. Okay. So the first example that I'm going to give you here, the example that I used was $100,000, right? So put yourself in the shoes of an individual. This example I use is a person that has not done a single deal in real estate, but they make $100,000 a year with a W-2 job or a 9-to-5 job. When you make $100,000, the tax deduction that I used is a standard deduction. So right now, the standard deduction for someone that's a single individual is just north of $12,000. If you're married, it's just over $24,000. Okay. But what you do here for a standard deduction for a single individual, all you're doing is subtracting the $12,200 from the $100,000, and you have to show that you made $87,800. That leaves you at a 24% federal tax rate. That doesn't even include state tax for those of you that are in New York or California, where you have the high state tax, you're getting hit again. But at 24% on a federal tax level, you're looking at paying $21,000 in federal taxes. What I try and help people understand is everyone should have a side hustle. Everyone should have a side business, because if not, you didn't make $100,000. You're paying $21,000 in the form of taxation, right? So exact same example, same $100,000, no business income, did not do their first deal in real estate. They still get the standard deduction, but the organizational expenses, they invested into some sort of a coaching or education platform. They're paying to get leads, whatever it may be. they have additional business expenses that they can take advantage of. Very quickly, between your phone, your internet, your power, startup expenses, business expenses, standard deductions, they add up very quickly to where now we subtract that from the 100,000 and you're looking at 57,450 that you have to pay taxes on. Okay. Federal tax rate at that income level is 22%. So now you only have to pay the IRS 12,639. I shouldn't say only, it's still 12,639. But with no money made in the business, not a single deal done in real estate, in 1 year, by having the proper business entity in place, $8,433 in 1 year in tax savings. Okay. Going back to Matt's podcast and what he talks about, I love how much he talks about how quickly these things can compound, right? He talks about the 12 years and the long-term vision. This is 1 year. Now look at 5 years, 10 years, 12 years. As you generate more income, taxes become a bigger concern in your day-to-day life. The more that you can understand your personal situation, and the more that this number can multiply as you generate more money, or even as you don't, the easier it is to build that long-term legacy. Okay. So tax savings is one of the biggest areas that we will focus on in making sure that you are not leaving money on the table. Okay. Business credit and corporate funding. Let's switch gears here. Anything, Matt, I don't know if you're still there in the background or not, but anything tax-wise that you want to add to that, or anything that I missed?
No, other than, just having a basic setup. A lot of people think that, that the wealthy have some sort of unfair tax advantage and they pay less in taxes. And no, they just have the right setup. And the tax laws apply to all of us U.S. citizens in the exact same fashion. You just need to have someone on your team to show you how to set your situation up as well. And I think what you showed was very key as far as, if you don't have a business, if you don't have an entity, you go to work, you pay your taxes, and then you get to keep what's left over, right? If you have a business entity, and even as Tommy showed, even if you haven't even done your deal yet, you go to work, pay your expenses, and then pay taxes off what's left over. And you can see how that almost cut that bottom line in half between those two distinctions at the very small level. But once you start making money and things start growing, that disparity between the two is significant. So I thought it was a great example that you showed as far as tax savings. And no one likes to really they don't get excited over tax savings, because it's not money that comes into your pocket, and it's not technically mailbox money, the type of money that we talk about here. But it is money that is not leaving your pocket at the end of each year, right? And I think that's really key. Like, we only notice it if it's actually when it actually leaves our pocket, and that's tough to grasp the benefits of that when we get to actually keep it in our pocket, because we already feel like it's rightfully ours, and it is. We all should pay our fair share. Let's keep it politically correct. That might even been politically incorrect to say politically correct. I don't know, but no one should pay more than they're required to. That's all we're saying.
For sure. Yeah. There's no magic wand around it. It's either you have a team of people that understand what they're doing, right? A lot of you have probably even heard this, but one of the examples I've been talking about recently is Amazon paid $0 in federal tax last year. How? It's not because they didn't make any money. They have a team of people, thousands or tens of thousands of people that are looking into that tax code of where they can reinvest or what deductions they're able to take to have that break-even point, so they're able to expand and grow. And it's smart investments that obviously help compound any business. Amazon being a ridiculous example, but
for sure. Well, to add another ridiculous example, when Donald Trump finally had to reveal his tax returns, and everyone discovered he only paid $700 in taxes, and everyone was totally outraged. And his response was, "If you don't like it, change the law."
Yep.
And the same laws apply to all of us equally. It's just whether you want to apply them to your situation or not.
For sure. Yep. Well said. Thank you for that. Business credit, let's kind of pivot here a little bit from taxes. This is an area that a lot of our clients genuinely have a lot of interest in for long-term growth. Business credit is an excellent tool, not only for long-term growth, but for personal separation for the legal and the financial as well, right? As I mentioned earlier, your personal credit profile, everyone's probably had an idea or had a business venture that at some point in their lives, I know I have, they said, if I had more money, if I was able to do this now, shoulda, coulda, wouldas, if you will, right? It's so much easier if you could build business credit from the beginning of your business than it will be long-term. And for those of you that have already been investors for 5, 10, 30, 40 years, I still have clients that I talk to that say, I wish I would have known about this 30 years ago. It's not too late, right? The major difference when you turn 18 and they start judging you off your credit history for student loans, personal loans, credit cards, how easy would it be if someone told you when you were 10 years old, they were going to get you an 800 credit score when you were 18, right? If you could do that for your business and build a separate credit profile, that way you're not always having to leverage personal funds or personal credit to either get yourself started or to be able to grow and expand like you truly want to, right? So some benefits of business credit. One of the services that we do offer is teaching people how to go through and apply for business credit. It doesn't happen just because you have a business. It's something you have to apply for. It's something you have to build and something you have to maintain. Now, it isn't rocket science. It's a process. It's just understanding the rules to the game so that you can separate your personal and your business. You can give yourself more funding options, and you can open the doors to higher limits, credit cards with rewards, lines of credit with lower interest rates, right? Speaking of interest rates, one of the things I loved on the podcast, Matt, was talking about equity lines of credit, the creative financing that you teach and small percentages of 5% on an equity line, but 10% in profit from a rental. How do we write off the 5%? How do we write off more expenses to be able to turn that 5% margin into a 7 or an 8% margin? Those all really add up, right?
Mm-hmm.
So if it is built with the business, lower interest rates, even credit cards with 0% for 24 months, just like they offer with the personal on the intro rate to get you into 0% for 12 months and then jack you up to 20%, right? We want to play that credit game because that really is what it is. It's a game based off of rewards and based off of interest, and one more way for you to keep more money in your corner.
Perfect. You know, we're here about 28 minutes in, and we've got a little bit more to cover, and I want to share everything with you and make sure that we make the best use of Tommy's time that we've got together. But if you already decided, like, you know what, yes, I need a business entity and I want to do this, and, you know, let's talk and let's see what's the best fit for me. You can go to freeentity.com. I set something special up with Tommy and his company there. So freeentity.com. It's essentially, they're taking away all of the customary expenses and the big expenses you would expect to pay with setting up an entity. And they're taking that off, and then you just have to cover the bare minimum, like with the state and the state filing fees and stuff like that. So anyway, just wanted to, if you were pressed for time and you had to run, go to freeentity.com and you'll have that conversation with them. And if it makes sense for you, they'll tell you how to take the next step. And if it doesn't make sense for you, to say no, thank you. And that's fine with us too.
Yep.
All right.
For sure. Yeah, well said. Yeah. Make sure you do go to freeentity.com, free business consultation, business assessment. So whether you are brand new or the seasoned vet, like I mentioned earlier, it is a free consultation. If we set up the business entity, like Matt said, you will have to pay the hard cost, state fees, filing fees, expenses that you would have to pay regardless. And if you're interested in the tax prep, business credit development, just let the representative that you speak with know. But that consultation is no cost at freeentity.com. So yeah, thank you for that. Asset protection, right? The elephant in the room, the one that no one likes to talk about, but everyone knows is there. Any real estate investor has to be aware of making sure that they've separated their personal and their business. A common question that we get asked, where is the best place to set up an entity, right? Wyoming, Nevada, Delaware, they oftentimes get thrown around in the real estate community of having additional privacies and protections and anonymity. And those are things that we can obviously talk to you about as well. But to what Matt said earlier as well, crawl before you walk, walk before you run, right? We don't want you to get in over your head and have to spend thousands of dollars for something that's unnecessary now. We want you to be able to have something that benefits you from a protection standpoint and a tax standpoint. And then as you grow, those are what I like to call good problems to have. The more good problems to have that you can create, the better. And we can always plan accordingly from there. So just some statistics for those of you that are into this. 76 new lawsuits filed every minute. 40 million lawsuits every year. Here's a list of the top 9, totally different list than it was 5 years ago. Discrimination against employee, discrimination against customers. That was not on the list 5 years ago, I can tell you that. It's going to be totally different in another 5 years. So regardless of the day and age, regardless of, like you said, the political landscape, at the end of the day, it doesn't matter. Give yourself the protection, give yourself the tax benefits, and show yourself as a business, right? So one of the examples I use, I hate the scare tactic behind the lawsuit stuff, but I don't have car insurance expecting to go get into a car accident. Prepare before you get into a situation so that you have that separation from an asset protection standpoint. So before we wrap it up here, one of the things that I always like to preach when I'm speaking with the clients that I already work with, what you are doing now is different than what you are going to be doing in 5 years. So as much as we want to crawl before we walk and walk before we run, your personal situation is always going to change, which means your business is going to change, right? A lot of you are doing this for your legacy, right? For me, it's for my family, for my kids. There's things that you want to be able to do yourself that regardless of who it's for or what it's for, even if it's just for yourself, asset protection is something that is never going to change, right? It's always going to be there. It's always the elephant in the room. And we don't want it to be something that happens too late. So for those of you that wholesale, for those of you that fix and flip, let's talk about your active income, anything less than 12 months. For those of you that are more buy and hold strategy and are looking at more of the long-term investments, short-term capital gains and long-term capital gains are two totally different things. So not only do we want to separate them from an asset protection standpoint, but tax-wise, you want to make sure that you're in that position as well. So this slide here is for those of you that are more experienced, have been doing this for a long time, full-time real estate investors. Trusts are so important to avoid probate, right? I know it's worst case scenario that if something were to happen to you, but everyone's heard the horror stories. Everyone has an example of a cousin or an uncle that doesn't talk to their family because of a death in the family. Make sure you have the T's crossed and the I's dotted. And then as you continue to build multiple streams of income, have the health insurance pay, right? Have that paid from your corporation. Put money into an IRA if you feel like that's a good thing for you. If you have money in the market, if you're into cryptocurrency, if you're into the stock market, if you have multiple streams of income, let's talk about that as well so that it's separate from your real estate and from your actual personal income. So anything here, Matt, that you've experienced or that you'd like to add to this final slide?
No, I said no, and then I was going to give you an answer, so I should have said yes. One thing about the trust, and a lot of people will focus on the death benefit of that, but also there is an amazing life benefit to a trust, and that's just your anonymity. And as you start to build a portfolio, whether that's in stocks or real estate or cryptocurrencies or collectively all of them together, the more that the target grows on your back, in a sense. When someone has an issue and they look to sue somebody, they're going to look to see who has the most assets. And, you know, if people can't see your assets and can't find your assets, then you become less of a target. And this is just something I've been very privy to as the more that, the YouTube channel has grown and the podcast channel has grown. And it's like, I've hold a lot of stuff and, I practice what I preach, and I am a real estate investor, and I've got a bunch of rentals and income properties, and I've got land, and I've got notes, and I need that extra level of protection. And I think that when you start, and it doesn't have to be notoriety or fame or anything like that by any means, but the more your assets start to build and the more people around you that start to know about that, the more that you need to consider this type of structure.
Yep, for sure. I totally agree. Yeah, Matt and I have a mutual friend that actually put us in touch. And he is huge and preaches that the trust needs to own the holding company, needs to own the subsidiaries, right? And he's got over 80 different LLCs and has got just, I don't even know how he does it and how busy he stays and how much he has going on, but it's the same thing. The goal is to build wealth, but look as broke as possible on paper. Because
right.
as much as you can possibly separate those things, the better off it's going to be if or when something does happen. So
perfectly.
I totally agree. Thank you for that.
And we must add right there, if anyone was thinking of anything different, that that all comes with the government's, that's all within the confines of the law. It's all moral, it's all legal, and it's what comes with the government's blessing. Like they put this out there, this roadmap for us to follow to have these types of protections around ourselves. I imagine they do it specifically for themselves, but they can't make it exclusive to themselves. So they have to make it equal to everybody. But you just need the right people on your team to make that happen for you. And they can guide you through that. And whatever makes sense for you, then you can do that.
Yep, for sure. I'm realizing I didn't mention this earlier, but entity setups, business credit development, tax filings. We do estate planning as well. And not only are we able to help structure in all 50 states for the entities, but for those of you that have trusts or have questions on trusts, or if it's something that you're interested in, that's something we can certainly assist with as well. So like Matt said, based off of this, Matt went out of his way to make sure that the free business consultation was for all the listeners and for this community. So go ahead and schedule your appointment, freeentity.com.
Perfect.
And we are more than happy to talk to each and every one of you.
Super. Thanks, Tommy. Yeah, like you said, we've worked out a deal so our clients get a complimentary consultation with one of their experts to brainstorm some ideas around helping you keep more of what you make. And then if it makes sense, they'll go ahead and they'll set up this business entity for you. And the best part is that they've agreed to pick up most of the customary expense that you'd expect to pay when setting up an entity like this. And, if you're thinking like, what's the catch? What's the sales pitch? Like, when are you going to hit me over the head with the big aha moment or anything like that? Because there's always one of those, right? No, because what they're doing is that they know that after they prove to you how good they are and how well they're going to take care of you, you'll probably want to do more business with them in the future. So that's it. It's a bribe, essentially, is what it is. It's the old show them how you can help them by actually helping them trick. So they're just good people, and I wanted to introduce them to you. They're going to look at your situation. They're going to take care of all the complex nuances of setting up a business and make sure that you are structured the right way. Because when it's done correctly, you can write off over, as he was kind of showing you, 250 different deductions, saving you potentially thousands, even if you are just starting out, even if you have not yet done your first deal. If you haven't closed that first deal, he showed you how just with the very first year with setting up this entity, how you can essentially cut your tax liability in half. I mean, you can even write off your investment with your coach, us here at Epic. So to book a time for your call so you can start keeping more of your hard-earned money, you're going to want to go to freeentity.com. This is a one-time call, by the way. So pick a time that works for you. And don't miss it. Be smart about it. Get set up the right way and save yourself thousands. Go to freeentity.com and schedule your free call. Alrighty, so if you found this episode valuable, who else do you know that might as well? Because there is a good chance that you do know somebody else who would. And when their name comes to mind, please share it with them and ask them to click the subscribe button when they get here, and I'll take great care of them. Alrighty. So that's it for today. God loves you, and so do I. Thank you, Tommy. Appreciate you. Health, peace, blessings, and success to you. I'm Matt Terrio, living the dream. Take care.